When you hear about the investing, are you pretty much intimidated, or are you really curious to learn about it? Whatever stages you are in your life, in a financial situation, I'm gonna help you out. This channel is all about not just extreming everything, but also learning and what you can do in your current situation to make the best out of it. So if you do not know me, my name is Mira. Really good to see you. I live in Florida over here with my family. And short story is that I was born in Burma and have dreams and hope to come to live in United States, make a life for myself, which I did. Like all the immigrant story that which you might heard it before, you know, one backpack and one luggage. Maybe usually people do one luggage, maybe I have extra backpack. And the rest is history. It is easy to say that, but the journey was not that quite easy. The story is that I did collect a few credit card debts when I start making money along the way, and life like creep and things happen in like some of the classic mistakes that I did. But then I learned my lesson when I'm pregnant, right? The journey begins, the real journey. Two really good things that I did was I never stopped learning, which is why I'm here sharing with what I learned in my life. And second thing is I never stopped investing. So there are 12 of them that I'm going to tell you today. I hope that either 12 of them or either one of them or either 2 or 3 of them are going to help you, give you some kind of motivation to keep going in your investing journey. Whatever stage of life in wherever country you are in, I hope that this shed the light in your life to make your dream come true. So let's start. Just want to let you know I am not professional financial advisor. I'm a self-taught, I'm a self-made investor, and also trying to be self-made millionaire. So that's where I am today. So I'm gonna ready to share with you. I hope you enjoy that. If you like it at the end of the video, please do not forget to share with your friends and enjoy the great life in your life. I would like to say thank you so much for watching, and let's get started. Just remember, when we do all these 12 things, I would like to advise that all is at the beginning of the year. Right now, what I'm videotaping is 2024, about February. So I always review my numbers and my strategy at the beginning of the year. I don't just finish in January. I usually, January to February, I just keep thinking, I just planning, I just strategizing, I make some changes. These kind of things I do. And also in the middle of the year, I also do some looking around and making sure that switching and making things around if I need to. And then at the end of the year, I also make the updates and strategize everything I need to do before the end of the year. And one of the videos that I made over here, I'll link it over here or over here for you. And that is like year-end checking. The video is pretty good. Like, you're gonna love it, because even if you are beginning of year, if you want to look at that video, it might help you to plan ahead of this great year ahead. Number one is good old emergency fund. Dave Ramsey said that you can do it for $1,000 for emergency fund. I think that is not a bad idea if you are beginner budgeter. But the truth is that in this war in 2024, $1,000 emergency fund is definitely not enough for inflation and everything else going on. So as a friend here on YouTube, I would like to advise that at least like 1 to 3 months for sure, but 6 months is very definitely give you peace of mind. But I think a year might be a little bit overloaded if you have some other thing to take care of it. So definitely that is emergency fund. You want to have it at least $1,000 or maybe 1 to 3 months. Number two is diversify your portfolio. What is portfolio? Portfolio is pretty much like everything you have in your bucket under your name for the investment. So you might want to talk with your financial advisor, or otherwise you have to research, read, and learn a lot like me, what I did. What I want to give you overview is that it could be like stocks, it could be bonds, it could be ETF, it could be mutual fund, it could be so many things, index funds and everything else. But be careful, depending on your age, you want to pay attention to it. Like, you want to go very aggressive, or you want to go to the a little bit conservative. So you really want to talk with your advisor, and you really want to review it. I have recently reviewed it, my portfolio, the whole thing, and I pretty much like it where I am right now. So I just kind of almost finishing up. Number three is long-term goals. You really want to align all your investment with your long-term goals. Sometimes people usually freak out when there's a market fluctuation in the short terms. What I mean short term, it could be like, 3 years. It could be like 2 years. It could be like something 1 year even. People like freak out, oh my God, something has wrong. But when you diversify your portfolio in the second step, I really do not think that you're probably gonna have to freak out anymore. So that's why diversify your portfolio is extremely important. But when you do the long-term goals, make sure that you're gonna, along with your age, it could be whatever you are doing it for, making sure it's very aligned with your lifetime goals. This one is extremely very fun, individual stocks or ETFs. So what does it mean is like individual stock can be, let's say, particular company, not just only mutual funds or index fund. It's just gonna be particular company, that individual stocks, and you really like it. But it can be very dangerous, so you really have to read and you really need to do research, and you need to know the growth fundamentals, and you really need to know their potential in the future. So you have to know what are they doing, how are they doing. You really have to watch out very carefully before you start putting all your money in it. Yes, there might be a lot of big growth for you if you got lucky, if you're a very careful investor. So these two can help you, but it's very dangerous. You have to be very careful. When I say stock, when you look at on the investment fund, when you type their symbols like GOOG, or it could be TSLA, or it could be AMZ, those symbols, you really have to watch out. If you invest in one thing and one thing only, if something went down in particular company, you went down with them. Or if they're going up, then you're going up with them. So you really have to be careful about individual stock. Depends on how young you are, and you can rise up with them. Or maybe if you get really lucky with that, you can figure it out. But those are things that, stocks are very dangerous. You have to be very careful when you are nurturing for your growth. I hope it makes sense so far. I'm trying to keep it very easy as I could make it sound. If you have any questions, please do let me know. As I mentioned it before, I am a self-investor, so I learn everything by myself, read, and I talk to the investor like day and night, years after years I have learned it. So I'm really proud of myself where I am today. The reason I become self-investor is that I did not have enough money to pay to other financial advisor. That's why I have to learn myself and take care of it where I need it to be. In the future, I might use a fiduciary financial advisor. You really want to choose a fiduciary financial advisor. What it means is that they are the people who take care of you above their interests. Next one is, it is a retirement account. It could be 401k, it could be 403, or it could be IRA. So I'm going to tell you all these things in the summary part of it. So I love all of those. So if you are in the corporate America working in United States, there's a 401k. If you're working for a nonprofit, then there'll be 403b. Or if you don't do any of those, if you just want to do extra on the side, then it'll be IRA. So I'm going to tell you each of them in detail right now. In the 401k, there are two types of 401k. One is Roth 401k and traditional 401k. So you really, if you can do that, I would like you to definitely suggest that do the 401k Roth. Because of that way, you're paying the tax right now instead of you paying the tax later when you withdraw it. So to me, it's no-brainer, because and when we were young, we want to pay the tax right now. Usually, the tax rate is gonna be a little bit lower than when you withdraw it when we're older. It could be 30 years, it could be 20 years, it could be 25 years, it could be 40 years, whatever ages you are right now. It is extremely important that if you're working for a company, you definitely want to have a 401k Roth. IRA has two of them. One is a Roth IRA, another one is traditional IRA. It's same thing as what I just mentioned to 401k. This is that you can do it in your own way whenever you can do. 2024 for IRA is $7,000 maximum for individual. Depending on the age. So if you are above 50, then you can invest more. So if you are under it, then you can do 7,000. So what is good about is that Roth IRA is that you're doing a tax right now, paying to the government, and then at the end of it, when you withdraw it, you're not paying the tax on a higher rate at the end of it. So it's kind of helping you out if you are that kind of person. But traditional IRA is helping you tax write-up, which means like, you make certain amount of money, and then, traditional IRA gonna reduce your tax. Depends on what benefit you. You can choose either way. What is it best for you? But at least you know that, so you can choose. Definitely talk with your accountant or CPA. April 15 in United States is the last day that you can contribute your Roth IRA or traditional IRA. So you really want to check it out and to see what can you do to max it out for your investment. Number 6 is really good thing, which is not exactly for us, for your future generations. So I used to have a 529 for my son, and I started it, the moment that he's born to this world. But then I realized that after a year later, and I stopped it. I'll tell you why I stopped it, and I'll tell you what are the benefits of it. So if you are interested in investing for your next generations, that could be the 529 for college education. Another big one is called IRA for minor, and another one is called custodian IRA. I'm going to tell you all these three in a nutshell. So 529 is if you invest in it, and that when they go into college, they can use it for their college education and stuff like that. But if they do not use it, then there's a way that you can transfer to certain people in your relative area. If your children or if the person who you're saving for is gonna be continuing their education when they are into college age, that is a great idea. But we never know what the future holds for a person. So that is one of the main reasons that I did stop investing in 529 for my son particularly. I did started it and I stopped it for a certain point. And plus I realized that if I'm doing something for somebody without that person putting effort into it, I do not think the money will be appreciated as I would. Not necessarily saying that whoever we're gonna receive it as a gift won't appreciate it. I'm not saying that way. I'm saying that it is much more worthier when you actually put work hard into it yourself. So that's what I mean. So the other one is another two things I really love. One of them I love the most, but I'm gonna tell you these two. One is custodian IRA. Another one is what I mentioned before, IRA for minor, which is for retirement for that person. Whoever, it could be 10 years old, it could be 15 years old, or they can do it, withdraw it when they're in their retirement age. So it is a pretty huge deal for them. They can start doing it, but that must be earned by themselves. It's not just like we love them. We say, here you go, $5, here you go, 30 cents. It's not how it works. So the last one is custodian IRA. I think you might have heard of it called UTMA, UTMA, which is the thing that you are kind of custodian, which means you are controlling the money, which is your money. You're putting in it, but you're putting it for that person. Is it your child or your niece or nephew, whoever that is? But then when they turn into certain age, it could be 18, it could be 21, and then they become the owner of that money. So that means money transfer to them. So you got to be watch out on it, what kind of gift that you wanted to give to a particular person. Number 7 is real estate. I think which is really fun to do that. There's a two way you can do that. Real estate is like the real property that you can invest, buy it and manage it and rent it, whatever you need to do with it. Or the other one is REITs, which is the fund that you can invest in the market, that you are investing in the real estate market. So either way, whichever way is better for you, that you can do it. But very careful about in the real estate, what market that you're buying and when you're buying it and what location you're buying it and how often can you manage to maintain it. If you are choosing for the physical stuff, it is extremely important you are aware of all the nuts and bolts before you all in it. I hope you're having a good time so far, because the sun is getting set and the sunset over here is quite beautiful. And I'm enjoying my time here. But thank you so much for keep watching. I have a few more left. I am so excited to share with you, and I want to say thank you so much. Number 8 is extremely important. Some people forget to do that. Here's called dividend stock. When you do the investing, make sure that you earn a dividend. That is important. Number 2 important thing is you make sure that you command that dividend into reinvesting to earn the compound interest. What happened is this. So you have this stock or ETF, whatever that you invested, it earned the dividends. But if you let it sit on it, it's gonna sit there for you. It's just gonna sit there. But you have to tell that dividend to go back and reinvest it to keep growing. So that way your compound interest is making bigger and bigger. So that is one of the best way to invest it. Even if you choose something simple ETF, it will continually growing for you. And you don't really have to do anything if it's a good stocks. This one is really fun. It's a robo-advisor. I have done it before a few years back then, but I didn't do it anymore. What is that there are a lot of robo-advisor. I'm gonna read it for you. SoFi, Wealthfront, Vanguard, Betterment, Fidelity, Acorns, Elifax, ASOX, E-Trade, Ali, Charles Schwab, and Stash. I'm not familiar with all of those, but I'm familiar with a few of those, and I did invest in a few of those. So I'm gonna tell you what is robo-advisor is if you are not familiar with it. Robo-advisor is pretty much like self-investing, but robot is doing it for you. So it's quite easy. They have a fees for it, so you have to check it out on it. Again, I do not know current situation, how much they're charging on that. So they're gonna ask you a few questions. They're like, how aggressive are you? How conservative are you? What are you doing it for? Is it for retirement? They're gonna ask you your incomes, all the stuff that they're gonna factor you in to come up with the structure and the strategy, so that way they're gonna choose a certain investment for you, so that way you can grow with them. Depends on what your options are and what your choices are. So next one is regular investment. To me, it's very simple equation. Small is better than never. So small investment regularly is better, way better than never investing, or doesn't even care about investing, or doesn't look about investing every year. Small, consistent investing and thorough investing is way better than careless investing. So how you do that regular? It could be like monthly contributions that you're doing the 401k, 403b, Roth IRA, traditional IRA. You can do those things. Number 11 is revise and review. Or review and revise. You really got to do that. It is quite fun when you're really into it. When you're really nerdy, you don't have to be nerdy. You can just do having fun with it. It is super fun when you start doing it every year and year. At first, it's very intimidating, and you're gonna freak out when things are going crazy in India or when things are crazy in China if you are investing in international market. By doing the reviewings and revising, it's definitely gonna help you, because by doing that, you kind of making sure that you're aligned with your life goals. You are making sure that your accounts and portfolios are diversified. I am not suggesting start buying and start selling everything. When you do revising and revisiting, it is not it. You are not going to sell it within the short notice, because selling the stocks in a very short time, there are a lot of troubles that you can get into it. So you really want to read all the news out there. You want to check with your CPA. If you have a fiduciary advisor, definitely, I would like to suggest that you definitely talk with them. The last one is risk management. Risk management means we try to take the higher risk and like better returns, and also that gave us an increase the volatility in the market. So we really have to watch out that how aggressive do we want to go. 10 out of 10. If we want to go 10 out of 10, then one of the things that I learned in this journey is that when you look at in your portfolio, make sure you thoroughly understand. Even though you have a financial advisor, you might want to look at your money. To me, it's fun to look at it, because that's your money. So you want to be familiar with the website that you are investing, whatever you hire some person, they have an individual farm that they're doing it, or it could be particular public farms that you are investing in yourself. You really want to learn, like whatever it is, learn everything in and out. Like for me, I drink the investment like water. I love to read my investment. I also like poke around and check around. I call people when I have a questions. I schedule it up. All the investments fund, you can definitely call them for free, but you cannot ask them for advice free, but you can ask a question. If you know how to ask a very thorough and detailed question, you get exactly what you needed to know. So it's very careful that how you navigate your question and your journey around when you do those investment things. As a woman coming into this country as a strange world, and different language and different cultures, and money management is quite a scary journey. But I went to the bottom of the ocean before in terms of the money, and I learned my mistake and I grow out of it, and I'm still climbing and I'm still learning everything from YouTube channel and everything that all my friends who I can trust, and I call a lot of things. I learned so many things, and I just definitely say thank you to all the friends who have taught me along my journey, whether they know or they didn't know it. But I just want to say, who are watching on this video, I want to say thank you so much. I hope that you get something out of this video, and let me know what you learned something. And when you make a bunch of money, come back and tell me that you love this, and I give you some kind of love and some kind of insight. I hope that this video helped you in your financial journey, making it into a billionaire or millionaire, whatever journey you're going to. I'm myself excited on my journey, and I want to say thank you so much, and I'll see you in next video. Talk to you later.